by the 5 UN Regional Economic Commissions and UNEP under the auspices of the UN Secretary-General's Working Group on Transforming the Extractive Industries for Sustainable Development. We're very pleased to have opening remarks from all 5 Executive Secretaries of the Regional Commissions, as well as the Executive Director of UNEP. We will start with a pre-recorded message from the Executive Secretary of ESCAP, Ms. Armida Salcia Alish-Jabana. Please go ahead.
It is my great pleasure to welcome you to this COP28 site event on responsible and inclusive management of critical energy transition minerals. We come together in the midst of multiple interconnected and overlapping crises. Still burdened by the impact of COVID-19 pandemic, we also face challenges of energy poverty and insecurity, conflicts and geopolitical tension, and increasingly frequent and extreme weather events driven by climate change. Despite this, we have reason to be optimistic. The energy transition is accelerating, bringing with it opportunities to address climate change, reduce pollution, improve energy security, and lift millions out of poverty. As the shift to clean energy system progresses, the demand for minerals critical to the energy transition will increase. To meet this rising demand, we must increase the capacity, diversity, and sustainability of generation at source, technology diffusion, and reducing impacts on people and environment. For each of these issues, cooperation is very crucial. ESCAP has had the privilege of the United Nations to enable member states to leverage the extractive industries as a driver of sustainable development. It has been an extraordinary partnership and a true demonstration of the collective strength of UN institutions. For example, all 5 regional commissions have worked together to produce the Clean Energy Transition Minerals Toolkit, a curated collection of resources designed to help UN-led efforts to better comprehend. The energy transition offers an unprecedented development opportunity. At the same time, we cannot be blind to the new challenges that it raises. If the last years have taught us anything, it is that the only viable path to a sustainable future is the one that we chart together. Thank you very much, and I wish you all a very productive and fruitful discussion.
Thank you, Executive Secretary. I would now like to invite up to the stage Ms. Rola Dashti, Executive Secretary of the United Nations Economic and Social Commission for West Asia. Please.
Potential to lead in the critical mineral sector. These resources essential for renewable technologies, $1 billion climate finance need for and sustainable consumption models. Embracing a circular carbon economy and circular economy, particularly in the recycling of critical raw materials, will not only foster resource efficiency, but also long-term sustainability. Sustainable mining practices are non-negotiable. We advocate for forward-looking approaches and robust governance frameworks that balance economic growth with environmental protection and social sector. Thank you.
Thank you very much, Executive Secretary. Now I'd like to invite up to the stage Ms. Tatiana Mosian, Executive Secretary of the United Nations Economic Commission for Europe. Please, the floor is yours.
Thank you so much, and once again, welcome to everyone. Ladies and gentlemen, I don't think I need to convince you that critical minerals are essential for developing, and the United Nations resource management system comes in. These are called UNFC, many of you might know, and UNRMS for short. Both systems are two interrelated systems developed by UNFC to support the sustainable management of natural resources. UNFC is a globally applicable standard for classifying resource projects. It evaluates the environmental and social impacts, the economic viability, technical feasibility, with a degree of confidence in the estimates. UNRMS, meanwhile, provides a framework for integrated and sustainable resource management. So it builds on the previous, on the UNFC. These two instruments are really offering many benefits, not just several, as my talking points say, but I think many benefits for the critical mineral sector. They can help in, first, assessing the availability and accessibility of critical mineral resources, considering at the same time the environmental, social, and economic aspects of their production and use. They can also enhance transparency, and I would like to underline, once again, transparency and comparability of resource information, so policymakers can take better informed decisions. They can promote innovation and competitiveness by encouraging the use of new technologies and best practices for the extraction, processing, recycling, and substitution of critical minerals. They can also minimize environmental and social impacts by applying the principles of circularity, efficiency, and responsibility throughout the critical mineral supply chain. They can also improve the governance and regulation of critical mineral markets by ensuring transparency, accountability, and fairness for all stakeholders involved. And finally, they can also help in raising awareness and understanding the role of critical mineral issues by fostering informed, inclusive dialogue among different audiences. Along with my colleagues, UNFC is committed for supporting the implementation of UNFC and UNRMS in the critical mineral sector in collaboration with international organizations, with all the partners, governments, industry, academia, and civil society. And I would like here to make a special call to the companies involved in extractive activities. Many of them are based in the region that I represent and operate in the regions of the other commissions. So UNFC and UNRMS are global languages, if you allow me to simplify this, if adopted and implemented, and benefits all stakeholders. They are project-based, so in a way they go well or very well with the approach of private sector companies. Adopting them across the whole value chain alongside traceability systems, as those developed also by UNFC, will help mitigate and over time diminish informal and illegal mining that have such a negative impact on the environment, on the local, and also on the local populations. With that in mind, once again, we specifically welcome the opportunity to cooperate among ourselves. You would notice that many of the points in our statements are very similar to from in particular from the UN family, because we have the same commitments as our core values, and together with the other regional commissions, with UNDP, with UNEP, and other UN agencies, in the working group on transforming the extractive industry for sustainable energy, launched by the Secretary General, we promote this approach. So if we are to deliver on the energy transition, we need the extractive industries. And it's essential that any work on the extractives is conducted with due regard for the environmental and social issues. So it's about building trust among partners, and we are ready to do this together with you. Thank you so much for your attention.
Thank you, Madam Executive Secretary. I would now like to invite to the floor Ms. Inger Anderson, Executive Director of the United Nations Environment Program, please.
Good morning. And can I just say what a pleasure it is to be here together with my UN sisters right in front of me, and some brothers, I think. Really, really great to be collaborating amongst a broad swath of UN agencies, from the economic commissions, of course, from which we have heard, the regional economic commissions, but also, they may or may not be in the room yet, UNCTAD, ILO, UNIDO, OHCHR, World Bank, Intergovernmental Forum on Mining, Minerals and Metals, IRENA, IEA, and many, many others. And so this is really great. We are all part of the Secretary General Antonio Guterres' initiative on critical mineral. And why is it that critical minerals are so important? My two dear colleagues have already mentioned some of it. Let me put some numbers to these things. Numbers show that we are going to be looking at needing over 3 billion tons of minerals over the next decade or so, if we are to deploy wind, solar, battery, geothermal power, and energy storage so that we can remain below 2 degrees. And I want to tell you, we really want to remain below 2 degrees. We're living in a wonderful world. It's a good world. And 50% of themselves, denying the people their rights, destroying the environment in the process, all becoming another extraction, invite all countries to sign up to. And this is led by the Secretary General's team himself. That gives you a sense of how important he considers this. And then there are 5 more modules, one that deals with strengthening production capacities, one that deals with trade competitiveness capacities, one that deals with environmental and social stewardship that UNEP has been entrusted to lead, and one that deals with governance and regulations. And different UN agencies or partnerships of agencies are leading different things. And for us then at UNEP, we really see this. We're no longer living in the world of doing no harm. That was yesterday's mining practice. Tomorrow's mining practice has to be to have a net positive impact on the world we see. And what do we do when we're done with it? In the garbage heap. How could that possibly be the right way when these are finite and very rare materials? So we've for the last 2 or 3 assemblies and considers this a critical issue. We have a number of agreements in place, as well as some sub-regional agreements to which Tatiana referred. Thank you.
Thank you, Madam Executive Director. Now we have 2 more Executive Secretaries.
% of copper reserve on Agenda 2030, and the review of the first 10-year implementation phase of Agenda 2063 have highlighted that the African continent is significantly lagging behind in its own energy needs and resource security, as well as supporting the global energy transition we need in order to achieve the climate goals. None of this is news. African countries have already set out a clear vision for the extractive sector and has a common position on energy transition, including the Africa Mining Vision at the first Africa Climate Summit this year. Across the continent, we are witnessing a surge in ambitious of similar resources found in outer space and in the high seas. As we go to the summit of the future, we must support our member states in articulating common and shared positions on how to regulate the exploitation of seabed and outer space resources for common good and shared prosperity. Moreover, for Africa to maximize and harness the full potential of its resources, it needs to invest more in creating an enabling environment for local and foreign
ability to accelerate countries' decarbonization. Structural changes are needed to achieve a more productive, inclusive, and sustainable economic development. At ECLAC, we perceive this as an opportunity and advocate for countries in Latin America and the Caribbean to invest in 14 driving or catalyzing sectors for transforming growth patterns in a more inclusive and sustainable direction, which include renewable energies and sustainable transportation based on electromobility. As we are well aware, this endeavor will amplify the demand in the producer countries. These policies involve several ingredients to scale up investments, knowledge and technologies, public-private cooperation, and robust governance systems, including fair regulatory and fiscal frameworks. While mining in Latin America and the Caribbean presents numerous opportunities, it also poses significant socioeconomic and environmental challenges. These arise from water consumption and pollution, impacts on fragile ecosystems, environmental liabilities, and alteration of traditional local activities of communities living near mining sites.
Sir, so what are the challenges faced by policymakers when considering
Good morning, everybody, or good afternoon. And thank you for giving us the opportunity to speak today. I'll try to
potentially impacts. So let me elaborate a little bit on this question. So, as was mentioned before, the green transition will lead to a very large increase in the demand for these critical minerals because green goods, green technologies are much more intensive in these minerals. So the demand will be front-loaded, but supply takes time to develop. Current production rates are not enough to meet the expected rising demand, with production gaps of ranging from 1/3 of the expected demand to sometimes 2/3 of the expected demand, just to give you a sense of the magnitudes. Of course, there are more reserves than are currently. Another source of supply to consider, as was mentioned in the introductory remarks, is the recycling of the critical minerals. So, for example, the reuse of scrap metals already occurs on a relatively large scale for copper and nickel. And it's increasing also for some scarcer materials like lithium and cobalt. Now, with demand front-loaded and supply quite slow to respond, we expect high price pressures. We expect the price of critical minerals to rise to their historical peak by 2030 and to stay there for an elevated period of time, probably a decade or so. So both these things, the increase in supply needed and likely increases in prices, means that these critical minerals are going to become macroeconomic relevant for economies. So we did some calculations in a net zero emission scenario by the IEA, and we calculated the cumulative global value of production over the next 2 decades for critical minerals. And we found about $11 trillion. And this net zero emission scenario to about 13 trillion for oil. So we think that, in the transition, critical minerals are going to become as important, basically, as oil, at least in crude oil, at least in value terms. This means that in supply, volatility, etc., it can impact the macroeconomy, so output, GDP, inflation, and will become relevant macroeconomic policies. Now, talking again about the growing economic relevance, of course, for countries that are exporting commodities, there are likely big gains to be had. And here we also did some estimations. For example, a 10% increase in the metals price index could add about 2/3 of a percentage point of economic growth to countries that export those minerals relative to countries that import them. Similarly, government finances can benefit from this through royalties or tax revenues. Now, I want to mention briefly 3 factors that could complicate the scaling up of supply. The first one is that these minerals are very concentrated, as was mentioned before. For example, the Democratic Republic of Congo has 70% of the cobalt reserves, while, for example, for crude oil, if you take the top producers, they only account for 40%. So, it's quite different. Of supply bottlenecks, for example, if the country can't get the financing to scale up enough mining operations, or if the country is affected by a natural disaster, domestic political instability, this could cut off part of the supply and generate a lot of volatility in the markets. You could also think of geopolitical fragmentation, that could hamper access to these resources. First complicating factor, the high concentration of these resources. The second one is the environmental and social impacts of these resources. So thinking narrowly about financing with investors increasingly area, you could see that some of the firms with lower ratings have have a more difficult time accessing the financing they need. And the third is governments need to give very clear signals about the commitment to the green transition, the pace of the green transition. Without those signals, one important recommendation from the IMF and other institutions, which is to launch an international organization or initiative to collect comprehensive data on critical minerals. So as of now, there is very little kind of joint data on the production, consumption, trade, reserves of these minerals. And this can create a lot of uncertainty for investments, can create also a lot of volatility in the markets because it's difficult to anticipate what is there and what's needed. So I probably also exceeded my 3 minutes, but I hope it's fine.
Thank you. So I really think you just line up just to give the overall picture for this, how the price will go up, and also what is the demand for the market and the environment and the ESG requirement for these industries. But there's also probably a challenging question why currently even the renewable energy products is going down. Since you need more minerals, the price is going up. But if you look at the market, the products of wind turbines and the batteries and also solar PVs is going down. So probably the demand and the price side, there is also some kind of delays from this kind of supply side. So we may come back to ask more questions to you, Florence. And now I would like to invite Jody, who is actually from our members of resources management, young member group. As you know, the extractive industries, we try to involve as much as possible stakeholders from a different side. You have different views from the young group about how can stakeholders group collaborate, distribute resources and their revenues to ensure just and
this fantastic collaboration that really has put the youth voice at the front and center of resource management discussions. And the business delegates to the G20 actually had a collaboration, a joint advocacy effort to decide that we will both include this really important topic in our communiques and to highlight to our world leaders that this is a topic that's worthy of attention because the energy transition cannot happen without thinking about resource management, especially critical energy transition minerals. So I think that's one story of collaboration. And another story I want to tell is something that we're currently working on that you will see in the public early next year, which is a guidebook for intergenerational action on resource management, particularly on critical minerals, that the Resource Management Young Members Group are putting together. Why do we do this? Because we realize that, especially since COVID-19, after the pandemic, the discussions around critical energy transition metals are mostly focused on security, but the issue itself, as I'm sure, much more than just geopolitical security risks. There are huge social, environmental, intergenerational impacts to the transition, which is why in the guidebook we're taking a value chain approach first, going from exploration all the way to circular economy, talking about the entire value chain and how we can embed a broader intergenerational consideration. That is also a story of collaboration. It's jointly authored by 15 young professionals in this space, engineers, geologists, economists, policymakers, people in the financial sector, and we're from 13 countries. So actually, Mr. Hongping, on the topic of collaboration as well, when this comes out next year in early 2024, we would also welcome ESCAP and the other regional commissions to collaborate with us to spread the word, do capacity building sessions, so this information is more widely available to broader youth from around the world as well. Thank you.
Thank you, Judy. You know, we always say energy transition is for our future generation. You know, without youth's involvement, the energy transition is not inclusive. So I'm really happy to see, you know, and also thank you for the invitation. And we also have in Asia Pacific, even during our energy ministers meeting last month, we had also a group of youth joining us and share their voice with the ministers, how they think about the energy transition and how they can play a role. So I really think, you know, with your involvement, I think we will have much more kind of inclusive kind of consideration for energy transition. Thank you so much. And we will talk more about the invitation and how we just bring our colleagues and the youth group from Asia Pacific to join you. So let's move to the next panelist. Is Ms. Vigya Sharma, is Senior Research Fellow, Course Coordinator, and the Primary Lecturer, Sustainable Minerals Institute from the Queensland of University of Queensland. So, Ms. Sharma, so what are relevant policy mechanisms and the best practices to enable country efforts towards value addition and the participation in global supply chain? Over to you, Sharma.
Thank you. Hi, everybody. It's great to be here. Thank you for the invitation. I think I also want to thank the panel, the people who behind the scenes who put this panel together. I think it's an absolutely critical topic and one that we can never get tired of talking and discussing because there's just so much to talk and discuss. In terms of policy mechanisms, I have a view that it shouldn't be up to the government to create frameworks. It has to be co-designed because they are the critical stakeholders. The governments and the private sector have different strengths that they can have to co-design and co-develop these frameworks. And I think in many ways, I don't want to sound cynical, but in many ways we do have quite a really neat number of frameworks that have, you know, a lot of effort and time and people hours have gone into creating these frameworks. So I think we have quite a few good frameworks already in place. I'm very excited to see what the United Nations, the Just Transition Framework that's coming up next year, what it will entail. But I think together we have enough tools and frameworks to get us going. I guess what the big is for me is the implementation and the accountability. And that's where we need to do much more and much faster. So it's the So that's where I see this a significant gap in, you know, in the monitoring of these standards and who is accountable at what points in time. And I think we need to bring some resources to bear on that front. The other thing that I couldn't agree more with Mr. Ajab Noor was to build capacity and capability within all stakeholder groups. So obviously, I have an academic hat in my day job, and I teach engineering students. And I have to say that in our university, we have seen a decline in young engineers wanting to do mining engineering. And I think it's something we have to be seriously finding ways to address. It's because of the past legacies of the extractive sector and things we really have to do better. And, I think the UN person Inga, who mentioned, the idea of legacies and tailings. Remember, we are talking about opening so many more mines, but we can't do that and go that far considering closing mines. And she mentioned tailings, mine closures, and what it means for the communities as we transform one energy sector into another. So I think we need capacity building, both not just within the industry and skills development within the government, but also encourage the newer generation to come as active participants in the dialogue on energy transition. And then just finally, I do also feel that there has to be a bit of a mind shift within the private sector. There has been a strong, and I'd get how we regulate and how we create frameworks for accountability, there has been over the last several decades a focus on risks to business. And it's very transactional, to be honest. So we have to think about risks, outward-facing external risks to society, and what does it mean? And there is a business case for the governments and the industry to think proactively about, well, yes, there can be a reputational risk if we don't meet the standards, but there is a far longer-term generational risk if we don't do it better. So I might stop there, but yeah, those were my couple of takeaways. Thank you.
Thank you very much, Ms. Sharma. I think this is very important about stakeholders' involvement. As you see from the UN system, this morning you see all these regional commissions and the UNEP, UNDP, and as Inga also mentioned, the UNCTAD, ILO, all the UN agencies take this kind of minerals and extractive industries as one of our priorities when we talk about the energy transition. So that's really need a joint force and to move forward. And thank you very much. Now the second round, I just want to have a different order. I will start with Florence and to ask how concerned you about this impact of fragmentation of critical raw materials, critical mineral market on the energy transition.
Economic fragmentation, it's something we really worried about as a multilateral institution at the IMF over the last few decades. And that's for concentrated, and supply is slow to react. So if you have some disruption, to trade flows between countries, you might lose an important supplier. Matter of fact, we saw that since the Russian invasion of Ukraine, there has been a pickup in fragmentation in major commodity markets. Since it's the first time that really some countries have been using trading commodities to exert political pressure. And we've seen a strong pickup in new trade restrictions in commodity markets, which we think is worrisome. Now, so what we did in our recent World Economic Outlook, which is one of the flagship reports of the IMF, is try to analyze, do a scenario analysis to see what would be the impact of a severe geo-economic fragmentation on commodity markets and the green transition. And so we did, just to give you a bit of background, the scenario assumes you have two big blocks in the world. And the way we grouped countries was based on their vote on the March 2022 UN resolution. And so to simulate what would happen. And the bottom line basically is that the cost of minerals increases by 300%. The consequence of this is basically a 30% investment in renewable energy and production of electric vehicles compared to what we would need for the net zero transition. So the consequences can be very severe, can significantly slow down the green transition and prevent us from stopping climate change. And another interesting finding was that every block loses in a way. So of course the block that doesn't own enough critical material loses, but also the block that has a lot of critical materials cannot really exploit those critical material to a much larger extent because they depend on the other block for processing of these materials. So of course this is a bit sensitive to how you group countries, etc. But I think it's a nice illustration, of the potential risks of not working together and not leveraging trade to do this. Now, avoid, having these. As well as discriminatory subsidies, at least having less exceptions based on national security and of natural resources. Those are important questions, but sometimes they can be used for other purposes under the disguise of these arguments. If full cooperation is not possible, then at least what we call a green corridor, that's a minimum agreement that would allow the free flow of these critical minerals, could be a second best solution. And because this would involve a smaller number of countries and smaller number of commodities, so, trying to diversify the sources of supply. So if you lose access to one, you're prepared, and you can scale up supply from your other suppliers. And greater investment, of course, in mining and exploration and recycling of critical mineral. Also, because we are a macroeconomic institution, we think in terms of fiscal buffers, building fiscal buffers, financial buffers, strengthening your social safety nets, in case there is a sudden high increase in the price of.
To see how we can support this sector. And one of the things we did was to undertake a study. We commissioned Bloomberg to undertake a study of the critical minerals on the continent. And some of the findings of Bloomberg are things we already know. It says that Africa has 30% of the world's critical, or what we call strategic minerals, if you bundle them up together. But if you disaggregate them, Africa has about 70% of the cobalt. It has about 85% of platinum and chromium. It has 85% of manganese. But all these things are being exported out of the continent in its raw form, with no value addition taking place on the continent. And what you see is that Africa doesn't even have a role or a place in the critical minerals or battery electric vehicle value chain. And we want to change this narrative. An analysis by Bloomberg said to us that it will cost 3 times less if we can establish manufacturing gas emissions significantly in the world. And for us, how do we play in this area? As a development finance institution, our role is to ensure we are able to mobilize capital into this sector. And the capital we need is private capital. And it can come in different forms. It needs to be blended. It needs to be concession. It needs to be philanthropy. It needs to be commercial. And that's been our objective. And in our Flexing Bank, we came up with some innovative financing solutions to be able to do this, because we know that unless we set that pace, we're going to struggle to bring in private sector investors. So we came up with a project preparation facility where we are funding up to 1 billion for the development of pre-feasibility study to look at setting up manufacturing facilities in DRC and Zambia. And I'm happy to tell you that we got the 2 governments to sign a framework agreement in April this year, and the pre-feasibility study is currently underway. So we put, out the first drop of funding to be able to attract more funding. And our aim is that we're going to be able to mobilize other partners to co-invest with us in setting up these facilities on the continent. Another thing we've done is that we've come up with a suite of guaranteed products. And this guaranteed products is to be able to give private sector investors, both within the continent and outside the continent, some sort of assurance that should they invest, their money would be safeguarded. Because private capital just wants guarantee that if I put in my investment, I will be able to make a certain return at a guaranteed time. So our suite of guaranteed products include country risk guarantee, guarantees against expropriation, guarantees that support investment, etc. And we are willing to work with investors to ensure that they are able to safeguard their investment should they invest with us in developing value addition in the critical mineral space on the continent. Another thing we have is we have a subsidiary company called Fund for Export Development in Africa. It was recently set up 3 years ago, and it is to provide patient capital. We call it impact investment because we don't want to commingle it with what you call your typical equity fund, which is not bad in its essence, but impact investment funding needs to be more patient. And so our Fund for Export Development in Africa is exactly that. And what we want to do with it is that where these private investors are willing to invest in critical minerals, value addition on the continent, our Fund for Export Development in Africa is also going to take equity stake alongside them so that we have skin in the game and we are working together. Another thing we've done is advocacy. Advocacy in engaging our member countries, because we know that for you to attract investment, you need the right policies, the right regulation, and at times the right economic and fiscal incentives. And we started with a pilot project in DRC and Zambia, and one of the things that was embedded in the framework we signed with them in April were the right kind of policies that we think are going to attract private capital. And we are working with them currently to map this out and get them to sign this off and start instituting this, because we know if we don't have this, it's going to be very difficult for us to be able to scale through. Then lastly is advisory services. We realize that we need to also get local players on the continent involved. And we need to ensure that it's not just these two countries, but we find a way to integrate it into the copper, the mineral region, of the continent that stretches from East Africa to Southern Africa, bringing in Tanzania, bringing in Madagascar, bringing in South Africa, bringing in Gabon. And so we worked alongside other partners in providing advisory services and in trying to integrate this in line with the AFCFTA. Thank you.
Thank you, Ms. Doherty. I really think this is the aspects from you about the African continent, especially how to just localize the facilities to increase the value added to these minerals, and also how you just work together to provide this kind of capital support investment along this process. Thank you very much. And now I want to move to Julianne. And how can we embed ongoing work on critical energy transition minerals and that of the working group on transforming the extractive industries for sustainable development into COP agenda? As you're part of the member for that working group, so what does it mean, a key agenda in terms of items of this year? So if you also observe the COP discussions, and how do you think this is one of the key agendas items from this year? Thank you.
Thank you for that question. I want to what the working group's website says to make the case is for a quarter of the global GDP, half the world's population, and nearly 70% of those living in extreme poverty. There's a source of grievance, and the climate impact, as I've said in the first round, is enormous. So when we're thinking about the COP agenda, things like the impact of implementation and response measures, discussions around responsible management of resources and critical minerals should be part of that discussion because it is critical to the energy transition. But it's not only in that area. I see other areas as well. This year, a key item of discussion is the work program on just transition. And its intent is to establish national and sectoral pathways that can then guide policy, that can inform policymakers and financial capital allocation towards the outcome that is needed. And critical metals are very relevant for the just transition discourse as well, not only within a community, but as Ms. Doherty said, in a global sense. Last year at COP27, we saw discussions around Bridgetown Agenda on the cost of capital to mobilize finance to developing countries in an equitable manner. So when we're thinking about how do we address extreme poverty and the other social issues that are linked to mining, I think, again, that is very relevant for many of the discussions that were happening at COP. For us to talk about this, clearly. And I think we need to enable that discussion to happen at COP. Three ways. One is education, second is advocacy, and third is advisory. What do I mean by education? It's not only educating young people, though the panels have rightly pointed out we need to have a pipeline of specialists and technical experts to continue working on this subject, but it's about making the case to elevate the agenda and the importance of this topic to be on par with the energy transition. So when we're talking, there's a very clear direction of travel. When you ask anyone, what do we need to do with the energy system in light of climate change? Everybody can point that we need to go more green and have a just transition out of the brown and into the green. But I don't think the conversation around resource management is yet on par, and we need to elevate that discourse. And the guidebook, I will come back to it. It's to an extent serving this purpose, at least by making information, very technical information around resource management more accessible for young people, but for the general population. The second thing is on advocacy. We've talked about the enabling roles that policy can play, but I do think when it comes to the extractive sector, there is a spatial and temporal lag amongst our policymakers. What do I mean by that? The concentration of producing economies, as you mentioned, for many other policymakers who are not necessarily from a producing economy, I think there is an out of sight, out of mind mentality that we need to reconcile and address. And the temporal lag in the sense that the mining industry's impact will not only manifest in this generation, but also for future generations, considering the lifespan and life cycle of mining operations. So that's something that we need to reconcile. And another way that we can build capacity and elevate the agenda of the priority of this issue is to talk about it more on different panels. This is the panel that's dedicated to this issue, but there's probably only a handful at this COP. We're seeing the rise, and we need to do more to engage with policymakers and engage with financial institutions, engage with companies, engage with communities who will be most impacted by this change. And lastly, advisory. I think only by achieving that capacity building that we need at the scale that we need and the advocacy that we need to do, then can we build more advisory, technical knowledge, expertise, penetration into existing bodies, like the working group that is being set up, so we can truly make resource management, give the issue the attention that it deserves.
Thank you, Judy. I really think your voice is heard by those parties, and also I totally understand your call for not only talk about this within this group, and you should go across different sectoral kind of like meetings or dialogues, and bring more people or stakeholders to be engaged. And that is, one of these, I think earlier, Inger and the other like speakers mentioned about the Secretary General already set up this panel that is mainly on critical energy transition minerals during this COP. So that's one of the, you see the tangible kind of outcome. That panel will bring together government, different stakeholders, and to discuss like a common and voluntary principles to guide the mineral industry, the extractive industries. That's exactly, you will see the progress from this kind of a discussion. So now I would like to invite Ms. Sharma about another question. How can countries collaborate to develop more resilient and sustainable supply chains for the critical energy transition minerals and the renewable energy technologies? So can you just briefly just focus on this, give the time constraints? I want also to open the floor for the audience afterwards.
I'll try my best, yes.
Yes, thank you.
Trust and respect, which are very simple words, but very, very difficult to implement and execute. So I think countries can really collaborate if they are in the spirit of genuinely looking out for each other. And it doesn't mean that they have to stop being competitors. In no way am I indicating that. What I'm saying is that they have to focus on strategic cooperation just as much they are focusing on competition. Another thing which I won't dwell much on is the human capital, which other panelists have said in plenty already about. I also think I really agree with your point about focusing beyond the nation and regional cooperation. Because if we can develop really resilient regional supply chains, we can actually compete with the global supply chains, and this idea of diversifying, it will just come about organically rather than forcefully. So I think I'll leave it with those 2 points, if that's okay. Thanks.
Thank you, Ms. Sharma. Finally, I come to Mr. Ajabano about the last question. How can countries strengthen mineral resources governance and improve data transparency? So I think you're from the government, that's very important to you.
It's a very important question.
Right.
I think databases has to be available, geological surveys and others that refers to the endowment availability and the prospects and other information needs to be available, for investors, for concerned people. I think Saudi Arabia, what we're doing now, I'm not going to take a lot of time, but Regional Geological Survey program was launched 2 years ago, and it's covering like 635,000 kilometers into the Arabian Shield. And part of its outcomes and results or deliverables is to map everything. And mapping everything meaning putting it on a database that is accessible worldwide. Another initiative is the National Geological Data Center. That'll be available and accessible to people. So people who wants to come and invest, explore, can get the data. Even today, you can go to the website of what we call the Saudi Geological Survey, and you can have data. There are some data from previous work. But it's important to have this data, geological data. So it's the starting point, as we all know, whether you do exploration or anything else. If you don't know the recurrence, it takes a decade, as mentioned by my colleagues here. But that's really very, very important. Government has to play that role. So make this information available. And necessity to discover or explore is important, but then the operating models of different countries and the way they think about critical minerals kind of varies, and some countries want to extract minerals from an upstream activity and they want to process everything within. And some countries want to bring resources from other countries and process within. So there are so many, operating models, and it's all economics probably, but definitely never forget the sustainability requirements and social, community, all these things has to go into the role. But database of all geological information, I think governments needs to work on. I invite you to go look at the Saudi Geological Survey website, look at the data. There are good data. I think we have another 3 to 4 more years before we do the complete mapping, because we're doing geophysics and geochemical, and that is taking place right now. It is the largest RGB program that is being done now worldwide. So we're happy to really launch the mining industry in the kingdom. It's going to be the third pillar of the economy, hopefully. But again, a super region mentioned by several of the panelists here, especially Africa. The super region that we are focusing on is more East and West Asia and Africa, which has most of the endowment, 90% of it. Unfortunately, 75% of the money spent on exploration by the World Bank is spent on 10 countries, which is, this region is not part of it, none of it. So there's a lot of work to be done. So governments need to drive the agenda with collaboration with everything else, co-develop, co-work, you need everything. And thank you very much for giving me the opportunity.
Thank you. I really think data transparency and also database is very important. That's also one of the areas, our working group is working on it at the Knowledge Hub, but also establish a kind of a knowledge product to put all these things together, including data, and to provide this information accessible by public. So thank you so much for all these good questions. We have 6 minutes. Now I just want to open the floor probably for one question. Sorry, one question. Oh, so many questions. Two, because we have to close this meeting in 5 minutes. So if I can start from one from here. Yeah. Can you just identify yourself and just address who is also going to ask these questions? Yeah.
All right, how's this? Cool. My name is Ian Hitchcock. I'm a Master's of Public Policy student at Duke University, and we've heard a lot of talk about the need to be inclusive of local communities, but I wonder, kind of more specifically trying to drill down, are there particular policies that might translate communities? What does doing that well actually look like, and how do we incentivize industries that have historically been extractive to be less extractive to the people in the places where these minerals are? Thank you.
Okay, I believe I have 30 seconds, so I don't know if I can answer, but I'm happy to take it offline. I think we do have policies, but it comes down to implementation in one. That would be my sort of off the top of my head response. But I'm also, out of interest and in full disclosure, out of preparation for this panel, I was actually looking at all of these multi-country partnerships that we have, because I think that speaks to a lot to how different countries are planning to diversify their supply chains, etc. And I found only 2 which have developing countries as partners, right? Most of them are OECD-led and with other OECD partners. So I found the Energy Resource Governance Initiative, which had Botswana and Peru as partners. I found a India-Japan strategic minerals partnership. I guess what I'm trying to say here is, it goes back to the point about trust and respect and being mindful of having the resources in the OECD to then be able to invest in resource-poor economies where we really want to be sourcing our energy transition minerals from. And that would automatically take us to vulnerable communities, marginalized population groups, not just over the last couple of generations, but restorative justice. We talk about that. Well, how do we implement it and what do we do about it? Not very much yet, I'm afraid. But hopefully this just transition framework that we discussed this morning will allow us to bring some policies to bear on those issues. Sorry, I don't have a more promising response than that.
Thank you, Ms. Do you want to also to add?
I don't know if I can just chip in. Another way we need to consider this is investment in human capital development in all these economies, in all these communities that host these minerals. And that was why our partnership is also looking at supporting in terms of developing human capital. And we are working together to set up what we call the Battery Council for DRC and Zambia, and developing battery council colleges that would try to scale up skills in this area. Because one of the key things we do not want to see is, even eventually when you have these facilities developed in these communities, you have significant proportion of those working there as experts. And the only way you can actually include them, empower them, and let them feel like a part of it is if they are also involved in the value chain. And it's not going to be from the onset that they'll be able to be investors, no. Maybe in the long run, as they kind of understand and develop their skills and their knowledge of the industry. But the first place to go, or the first way to go, is to capacitate the people, develop the human resources, get them involved in the value chain, especially on the higher end of the value chain, and then you see them becoming investors themselves and owning a part of the value chain. Thank you.
Okay, Judy, just the last sentence for you.
Transition planning for corporations is key. The UK is set to mandate transition plans for regulated companies, and one of the key pillars that make a transition plan credible is engagement. Engagement with peer companies, engagement with governments, engagement with stakeholders and the people affected in the value chain. If more countries, there's a proliferation of transition plans guidance that are hopefully going to be kicked into regulation, but I see that as a very tangible way to enhance corporate action.
I thank you so much for all these panelists and also for the audience. I'm really sorry I cannot open the floor for more questions because the other session is waiting outside. I just want to invite you to join me to thank our panelists for this excellent discussion. Thank you very much. And I still hope if you want to have questions, just ask them on the site. Thank you. Have a good day.
Thank you.